Alrighty, let's take a look at today's featured stock pick, and we'll take a little peek at the market here. Today's featured stock pick is an old featured stock pick that is back in that tradable area again, and it's KEG, K-E-G, K-E-G. So if somebody was already in this and you bought it when it was originally picked, I'm just going to pick the middle. You're up right now 11.5% maybe. Like I say, depending on where you've entered it, you're up 11.5%. And I still think that we have another 9, 10, maybe 12% to go to the 200-day to the 200-day moving average. Excuse me. We're still trending up here. If you take a look at this chart, what it's been doing. What all charts do in a trend, all charts, there are no exceptions, none whatsoever. They move up, they move back, they move up, back in the trend. Well, guess what? We're starting to move up again. Nice little Hiromi, follow through, then a nice little pop out Friday. This looks like it's headed back up. Do you think it's probably going to pull back again? I would say so based on history. But it's a nice trading chart. It's trending up. As long as it holds these lows, this is where you want to stay in it. I do think you want to be careful not to buy it high and then hold it down to the lows. You're much better off to buy it low. I still think it's in that area where it could be bought. Looking for that 200-day moving average as the target. So if you're looking to trade KEG here, any kind of consolidation today, it's back over the T line. Notice how it's in its trend, and notice how it moves back and forth over the T line, above, below, above, below, above, below. This is where I use that T line as what side of the trade am I on? Now, I don't mean to say, well, I can't buy it right here because it's not on the right side of the trade. What I mean to say is if I continually buy here, and 3 or 4 days later it continually moves down, well, might want to rethink your buying a little bit, because there's buyers, basically breakout buyers, and there's pullback buyers. And if you're always kicking yourself where you buy it basically on the breakout, and then it always does this, rather than beat yourself up, change a little bit of how you're trading. So move to buying here. Your stop is at the bottom. You still know where your stop is, and then you can trade it above the T line. Many times it continues up. Sometimes it pulls back for another buying opportunity, maybe an add to, or maybe a new buy. Maybe you sold it here. The point is, it's in the trend, and we want to trade in that trend. Let's see here. What is Mike asking? Rick, was something like KEG, would you lose? Would you use the close below the T line? Would you close the close below the T line as an exit, or would you need to possibly ride the 20-day simple 730 area? That's up to each individual as a trader, Mike. What are you willing to work with here? Some traders look at this and they here, let me get rid of this. Let me get rid of some of this. Some traders look at this and let me draw a big line here. We're going to start right here, and we'll stop right there. We start here. We have a bottom. So some traders look at this and they say, okay, I don't really care about the moving averages. I mean, they're just averages. We know that price action can dip below them a little bit. That doesn't break the bank. We just know that price action can do that. But what we see overwhelmingly is the trend is working. So might somebody hold it down here? Sure, if it's holding the trend. So then what happens is, we start looking at that trend, and here, we come up to this level, and you can see how it moves up here. So it's holding this trend right in here. So somebody might say buy it, hold it. If they see this overall thing working, then they hold it through these areas, or maybe even do some adding, maybe buy a little more, buy the dips is what they're doing, buy the dips until they get to the point where they're going to close it to maybe that target. That's pretty easy said right there. Let's look at this overall. Let's shrink this up and get a bigger picture of it. Look what this chart is doing. I mean, to me, I look at this and I see this chart is starting to move down and starting to move back up in this area. So if you can, if you can justify the 200 or justify something higher, then you take a look at that trend, and one's going to trade within that trend. I hope that answered the question there. So where exactly you put your stop, that's up to each individual trader on how they want to trade it. I think KEG continues to move up like that. How are we going to trade it? Everyone's different. Everybody's a little bit different. Okay, let's take a look at the market here. SPY. The SPY did great Friday. Absolutely wonderful. A little bit boring, slow, and a bit negative in the morning, but holding above the T-line. We'll look at the 30-minute chart in a minute here, but it did hold up on the daily chart. Looked very good. And then pop in the afternoon, it took off and looks terrific. Now, with all that said, well, let me back up. I am definitely a bull here. I'm a bull because price action is still leading the T-line. I'm a bull with this market is getting a little bit overbought in the back of my mind. So I want to keep that back there. And each and every day it moves up, that oversold, overbought condition moves a little bit forward in my mind, closer to the front, because I know that the higher we get, the more dangerous it gets, and the more likelihood, the probabilities are greater that we get some sort of a pullback here. Let's take a look at that 30-minute chart. Friday, I was using this line right here, and then this line right there as kind of the do or die. I mean, it had to close above this area and stay above this area, otherwise we may have a problem. Not only did it came below, but it didn't close below, and then it came right back up. Not only did it close above this upper line here, but it came up and tested some new highs. It pulled back down. So what I'm seeing here is we have a little double top action. Now, what does a double top mean? Does it mean that the market's going to roll over? Absolutely not. Not at all. It just means we have a double top. It just means that there might be a little stumble, a little hesitation. Just might mean that there's a little bit of congestion in that area. I mean, we came back very nice. I'm still going to be watching the 30-minute chart because I think the 30-minute chart might tell us a really, really good story on what the market is doing. Let's suppose for a minute, well, let's do it this way. Let's make that green. Let's suppose for a minute the market does this and stays up there. There's not much more to say. The bulls are still in charge. Rock and roll. Let's have some fun and games and go to the bank. On the other hand, what if the market comes up something like that, where this candle is, maybe puts in a little shooting star like that? Well, that's going to start making me worried that we may start to move down a little bit, and then we can start looking for more downside. And if it does that, this would kind of show me that we're putting in somewhat of a top in here. So I think the first few candles may tell us a little bit here in the morning. The first few would be, say, the first hour and a half, maybe even 2 hours. Might give us an idea what's going on, and then we'll watch how that follows through and plays out through the day. Alrighty, let's see. That was a little bit on the SPY, and then of course our featured stock pick, KEG, which was a stock pick back a few weeks ago, and it's still in that area right now as a featured stock pick. Alrighty, everybody have a great week. Enjoy your trading today. I'll be back in just a few minutes and see if we can make a trip to the bank today. Thanks a lot.